BD Prof, and I want to speak today on the importance of psychology in trading. Psychology involves your mind and the way you think through the trading process, and trading can be a toll on your psychology. So I want to show you a trade, and I want you not only to see this trade. I want you to try and create the feelings that went around this trade, and what type of psychology should you create or should you have when you are doing your trading career. So I'll be trading this gold, and this is the H4 profile. We are seeing some consolidation here, and if you can see this last candle, this red candle actually stopped the liquidity here and closed slightly above the half of this previous candle. So we were already bearish for the next 4 hours. So let's trade H4 profile. So you go to 1 hour, mark the PDRAs, previous 1 hour low, and then we switch to our context, which is M15. Expect the first or the second. Switch back to H1, adjust your line, the first or the second. The first, and we got an expansion on the first candle. Thus we mark this candle that gave us the expansion. And then we mark both high and low. We say the high and low. The low will give us an opportunity for entry, and this one will give us a speculative point where we shall place our stop loss. Now we fix our entry, which is M3. We expect an expansion between the first, second, or the third candle. So the first, second, or the third candle did not get an expansion. We switch back to M15, mark that candle. We adjust our line, and then we can go to our entry time frame. Now before this, we need to examine if there is a fair value gap on this price leg. There was a fair value gap here which has been mitigated, which makes this candle a valid order block where we can put our stop loss. So this is our valid order block where we can put our stop loss. Now I want us to, so we're expecting a bearish engulfing, either the first or the second. The second candle gave us a bearish engulfing. So this is the place where we enter the trade. Our stop loss right there at the order block. And then our risk reward is 1:2. We are selling. So 1:2. Now, this is where now everything starts taking another turn. At this point, you've done all your analysis, and you have come to the point of executing, and now you flip the trade. Between now and whatever time, you have only your trade duration. This is around 9:33, and this 4 candle closes at around midday, which is around 12. So that's around how many hours? 9 to 10, 10 to 11, 11 to 12. So 2.5 hours. That is your trade duration. So it is within these 2.5 hours where your psychology will be tested. It is within these 2.5 hours where you can find yourself making even irrational decisions. So most of the time you're being advised that when you open an opposition, just walk out of the chart, let the trade play out. Give the trade some room to play out. So let me play this and let's see how this price is being delivered within 2.5 hours. So already you are in a massive drawdown, assuming you at risk around 4% of your account. By this time your hands is sweating because now you are seeing your 4%. Your 4% is gone. You are in a massive drawdown, and Look at that. How many pips do you stop loss? Very few. I can't approximate. Very few pips. You are about to be stopped out of this trade. Now at this point you have already given up and saying, this trade is gone. Let me get a bearish cut. This is now at around 954. Still have time. So coming back at around 10:03, you are now in profit. And the thing moved in profit. And it smashed your take profit at around 10. So imagine the kind of psychology that was going on around this point. You could have decided when the trade is back to your break even, you could have lost the trade because you could not handle the drawdown that you were seeing. But sometimes you need to develop muscles. Know that this trading, it needs you to be stronger. It needs you to see the process, also to trust your strategy. The strategy that you've used to make this analysis. If you backtested it, one of the importance of backtesting these strategies is that it gives you confidence when you are trading, so that at least you are not hopping, you are not changing your mind over and over at the point of execution. So this was a nice trade delivery, and I can tell you my even 10:24, you could come and add a second trade because the 4-hour candle is yet to close in the next 1.5 hours. So you still have time. You could add a second trade, and this is the importance of having a good and intense psychology. So work on your psychology. And when I speak about psychology, most of the time, your trade decisions is tested. If you are very emotional, if you are a very angry person, trading will reveal your nature. And those are the kind of disciplines you need to learn to control your emotions. You need to learn to be calm, to be patient. You need those qualities to be a good trader. You need to learn. There's a saying in trading that says that if traders learn to sit on their hands most of the time, they will be very successful. So I'm saying this because I want us to be successful on this quest of trading, and the psychology plays a big part. Number two, this is a part where you could think everything is a scam, or you could even think the strategy that you've learned or you've paid your money for is a lie. But I'm telling you, backtesting is what will strengthen your courage. If you do more of backtesting, if you know how trading is done as a business, remember there is something called win rate in trading, where you are saying, if I take 10 trades, how many amongst these trades are losing trades and how many amongst these trades are winning trades? So if you do the ratio, you can have a winning rate. And for us, our strategy is around 60% win rate. That means with a risk reward of 1:2, you're still profitable. Even if you lose 4 trades out of 10, you're still profitable. So work on understanding trading as a business, because this business, there is a risk and there is a reward. And then you need to know how to play around with those technicalities: risk, reward, win rate. You need to identify high probability setups, because there are so many setups in the market. But at least you need to narrow down all your possibilities so that you can be trading only high probability setups for the trades that you want to take. So I believe you've learned something out of this. BD Prof signing out. See you in the next video.